Hello, everyone. Ben Bryce on Thursday, June 13th, joined by Ryan Etner to give you your midday mayhem. Ryan, we had a report yesterday. How did that finish out, and what are we seeing so far today?
The report was very close to expectations across the board. They did raise production a little bit, but there was still a little bit more of a difference there where wheat was maybe the most surprising report. Right. But as a whole, pretty much close to expectations. Not enough to make a major difference in the market, and small enough that the market will quickly turn attention to weather.
Right. And, I think weather's another thing we got to look at, but also the quarterly grain stocks and the planted acres at the end of the month. That's the big one. That's the one everyone waits for in June. And, right now, everyone was worried in April, May that, are we going to get in the ground? Well, it's in the ground, and it looks awesome right now. The new crop looks fantastic. So you're right. This weather coming up, I mean, you see forecasts right now, hot, warmth, and maybe not as much rain. So what should guys be doing with that out there?
Well, I would say that maybe now is an appropriate time to look for a little bit more of a bounce. We want to have hedges ready to go, but if you're going to find a weather bounce the second half of June leading into the acreage report, like you said, and the acreage report are your two best short-term opportunities here. So have a plan in place,
right?
But maybe we can look for a little bit more now.
Well, then that's what we saw last year, right? I mean, we had that rally come up at the very end of June, going into July, and if guys didn't have working orders, it didn't last that long. It kind of went up and then it shot right back down just as quick. So we just got to be aware of that when we're looking at these numbers. And something that I've been talking about is that a lot of guys missed those pops in May. We got, December corn got close to, $5. It was like 497 or 496 and 3/4. And then you had, beans too. They were up about 12. We haven't been up there since May. And these markets have been heavy, heavy, heavy to maybe sideways, maybe coming back to life a little bit. But, get those orders working and because a lot of guys didn't sell, people still need to lock in those prices. People might be a little bit early.
Yes, that's right. People might move their orders down.
The
whole market might move their orders down.
And if guys are starting to lock in, fall delivery or next year delivery, you're going to have those merchants in there selling too. So this rally is going to be found, I think, with quite a bit of, people on the other side of this that are like, all right, we need to lock something in.
Yeah.
All right. So, I mean, that's grains right now. But what's going on with cattle? I mean, they had a wild couple of weeks, and now it seems like momentum sort of shifted.
Yeah, well, now it seems like, the box beef has slowed down, so that's calmed down to just a slow grind higher, which is fine. And cash trades they've been down the last 2 weeks, but now it looks like we're going to have slightly higher this week. So that's kind of sideways as well. I mean, when we look out far enough, we see that the weights were up again. That's offsetting some of the cattle numbers. It all kind of puts together a neutral to just slightly bullish outlook. We would still say look for generally higher cash trades, but box beef remains the key.
Right, and that was sort of the reason, or part of the reason for that bounce that we've seen in the past year, right? Was that box beef number?
Yeah.
And now that's still it's up there. It's not losing strength, but it doesn't have that gas behind it that it once had, where it was just like week after week, it was just getting higher.
We took off higher, and now the last 2 weeks has been a slow grind higher.
Right. Yep. So you're thinking, if we continue to see this box beef come back to life, maybe that could, push back into the markets a little bit.
Oh, yeah.
Okay. All right. And I mean, I'm not even going to bring up hogs, but I'm going to bring up hogs because there's really nothing to talk about there. That market has been brutal here the past few weeks, and doesn't seem like it wants to. It seems like it found some levels here where it likes to hang around, but can it hold it?
It seems like we've taken away our biggest sellers, but we haven't attracted too much buying interest yet. Yeah.
Okay.
Or cautious buying.
Right. Yeah. So, I mean, is there anything else out there that we're looking at? Anything else you want to talk about today?
The one thing that I did want to mention is that grains are very closely following 2014.
Okay.
So I would advise anyone to go back and look at the 2014 charts. In fact, I checked that June crop report in 2014. We had strong crop ratings. The June crop report was quiet. And then going into the acreage, we looked for lower acres, but didn't get them.
Right.
So that's what sent the market significantly lower in 2014.
Right. So there's maybe some similarity, at least on the price patterns so far, and some of the underlying fundamentals. All right. So keep an eye on that, guys. If you have any questions, give us a call. We're always happy to talk. We've got a major report coming out, so look out for another snapshot again coming out this month. And with that, Ryan, thank you for joining. Give us a call, 1-800-2-MARKET. That's 1-800-262-7538. And thank you again for joining.